Okay, good evening and welcome back everyone to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we are going to be doing a Nordic market review. To take a look at where we currently sit within the equity markets, we have obviously had a bit of a pullback here over the past few weeks. So we want to take a look at the pullback in the context of the bigger picture and understand where we are within that pullback to give us a better understanding as to what our expectations should be going forward. Before I get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So we'll start off by talking a little bit about the education agenda in terms of what we can expect to learn here. We'll then do the full Nordic market review and see how, again, like I said, how the equity markets are shaping, what in the, especially interest rates and how that affects some of the equity markets. We'll also take a look at some of the economic indicators. We have seen a fairly substantial slowdown in the major economic indicators here in the Nordics. So we'll take a look at that and review some of our trade ideas. We'll do another paper trading review so that investors who are watching today, if you want to paper trade any of the ideas that we're going to discuss here today, you'll know how to go about doing so. And then we'll end this with a Q&A here at the very end. But the primary question that I want to help everyone answer, which is the question that we've been predominantly receiving over the past few days, is really how much downside can we expect from the current market correction that we've seen here in equities. So my name is Tony Zhang. I'm the chief strategist here at OptionsPlay, and I wanted to show you my technical research, the economic research, and just the overall view that I have on the broader markets that inform my decisions on the trading on the markets here today. So let's first take a look at the OMX S30, the Stockholm market. As you can see, if you look at the long-term chart, it's very much clear bullish pattern here. But last time we talked about how this was trading near a upper bound of a trend line, and it broke above that trend line, and that trend line became the new support. Well, that trend line just got broken a few days ago, about a week ago here, when we broke down here on the news of kind of the Chinese Evergrande news. So if we draw some short-term lines here, we have a short-term intermediate trend line that was recently broken. And since we broke this level, since the index broke the level, it's come back to retest it as resistance, and so far has been rejected lower. So that does not particularly bode well for the equity markets, especially when the momentum indicator has turned negative here to the downside. The long-term momentum indicator is also just turning negative here as well. So overall, things are starting to look worse for equities. As you can see, the short-term moving average crossed over the longer-term moving average, which has largely held as support here. As you can see, the blue line, the moving average, has held as support multiple times. That has been broken, and now all of these moving averages are now acting as resistance. Now, we've had a pretty big move here to the downside, and notice how we've made a lower low in price, but momentum no longer made a new low. So this could be a bit of a temporary bounce that we might see, but overall, my expectations are still going to be to the downside until the markets get back above these two moving averages, until it gets back above some of these major levels here, right? We still have a gap here that hasn't been filled around 2,300 or so. Markets really need to get back above 2,300, 2,340 or so in order for kind of a bullish trend to resume. Otherwise, my expectation is at the very least more of a neutral market. But if we break below this 2,250 level, then markets are likely headed significantly lower. So when you look at, on balance here, things do not look particularly strong. At best, we're looking at a sideways market. At worst, we're looking at some further downside. If we look at the markets here, you have a little bit of support around 2,200 or so, but if markets break below 2,200 or so, there isn't a lot of support here below 2,200 until you get to about 1,950 or so. You have a pretty big vacuum, if you will, trading between 2,200 and 1950. If we break below these levels, there's some potentially significant downside. So these are levels that are worth paying attention to and can potentially warrant putting on a potential hedge for your portfolio if we see things start to deteriorate below 2,200. So these are some pretty pivotal moments to pay attention to. When we look at the Copenhagen 25 index, very similar price action on the long-term chart. Now on the long-term chart, momentum still remains positive here for the Copenhagen index, so a little bit more positive here. We obviously have had the same downtrend here when we broke below this support level, came back to retest it as resistance and had a pretty big move here to the downside. Copenhagen has a lot more exposure to biotech and technology than the Stockholm index, so that's why, in my opinion, we've seen a little bit more faster and more violent move here to the downside. Momentum, as you can see on the daily chart, has turned negative here to the downside, but again, the long-term momentum still remains positive. So we're also fairly mixed here. Price action today, very weak. As you can see, we basically closed at the lows of the day. So when we look at the Copenhagen index, the 1880 level is really the level that I would pay attention to. At best, I think what we do is we see a more sideways market. As you can see, the short-term moving average has not crossed over below the long-term moving average yet, but we may just be a couple of sessions away from that happening, especially if prices stay where they are. But the true risk is if we break below these levels. The next level is around 1800 or so. So the Copenhagen index has more support, in my opinion, 1800 and 1720. Those are the two major support levels. I would be surprised if we pulled back to the 1720 or lower. I think that if you do see some downside, the 1800 and 1720 would be your downside targets to the downside, looking at the Copenhagen 25 index, which again looks a little stronger here than the Swedish markets here at the moment. When we look at the Helsinki 25, the long-term chart looks very similar to the other two that we talked about here. Clearly downside. As you can see, we're now testing the long-term support on this moving average here. This is perhaps going to see a bit of a bounce here, and then potentially either breaking out higher here or going back lower. But my expectation is that, as you can see, the short-term momentum has turned negative here. It's just barely hanging on to positive here on the long-term momentum, and the crossing of the moving averages is not particularly strong. We still see on the short term the same negative divergence, so lower lows in price, higher low in momentum, leads me to believe that you will likely see some type of short-term bounce here. But again, let's call it the 55, 25 level, if you will likely act as resistance here to the upside. So that's 55, 25 here to the upside. You have 5,300 as your downside support. Those are the levels that I would pay attention to here. If we can manage to break above this level, then we can resume bullish trends. If we break below this level, then we're looking at more bearish trends. And there's not a lot of support here all the way down to the 4,600 here. So Helsinki, if we break below this long-term moving average or break below this 5,300 level, there could be some significant downside. Another market I think worth looking at potentially hedging some exposure if you do have exposure to the Finnish markets here in Helsinki. And then lastly, looking at Oslo, this is the one that has held up very well because we've seen such a strong, sharp increase in oil prices. So out of all of the markets, the Oslo markets by far the strongest, not experiencing any pullbacks here at all, pretty much holding the channel. It's certainly near the top end of the channel here right now. It is at risk of a smaller term pullback, but especially with the short-term supply and demand disruptions we've seen in oil and electricity costs across the, across Northern Europe, as well as in China, this is likely going to keep oil and gas, liquefied natural gas demand to be fairly elevated while supply is in limited supply. And, you can't just turn on, crude production like you do with other commodities. So crude is something that takes a lot of time to bring up supply. So this is something that's likely going to continue to cause crude pricing to rise here in the short run. And that's really what's giving the the Norwegian markets some support here, and that's why the Norwegian markets, which is again largely exposed to oil and gas, in terms of an industry, that's why we've seen Oslo be the strongest. So out of all of the four markets at the moment, Oslo looking the strongest. The other ones are at risk of a pullback, specifically Sweden and Helsinki, and Copenhagen holding in there right now. But that's also one that I would look at to potentially turn a negative here in the short term. So please make sure that you pay attention to these markets, especially if you're trading. There's some bifurcation that we continue to see here in the broader markets. And we just want to make sure that you understand that before you initiate any positions here in the equity markets. And one of the major things that we also have to start paying attention to here is interest rates, right? One of the big movers of equity markets here over the past couple of weeks has been the sharp increase we've seen specifically in the US interest rates. 10-year yields are now 150 basis points. The Swedish 10-year yield is still only at 35 basis points, but this is one that has climbed quite a bit here over the past month or so. So before this, the sell-off, if you will, or the rally here rather in bonds, we had the Swedish bonds somewhere between 35 and 45 basis points. And we had the sharp bond rally, which caused yields to dip back towards zero, but we're now back into that range. And the question is whether this stays range bound or if potentially inflation expectations drive yields higher. And I think the level that we have to pay attention to here is 45 basis points. If we see a breakout here above 45 basis points and we start to see bonds sell off, higher yields are going to make equities look less attractive. So far, yields have made equities look far more attractive in comparison to bonds as bond yields start to pick up, especially in a more volatile and more uncertain future. That's really where bonds look more attractive, and you're going to see some flow away from equities into fixed income. So this is one that's really important to pay attention to right now, especially this 45 basis point level. If we start to see Swedish yields rise above 45 basis points, expect to see further downside pressure on equities. And when you get a rise in yields, that doesn't necessarily mean that you take a bearish position here in equities. It just means that you're no longer as bullish. Certainly not as bullish as these markets, that we have seen over the past couple of years have been since the beginning of the pandemic, rather. And then when we look at the economic side of things, this is really where we start to see more of a deterioration across the board. Manufacturing PMI, significant decline in manufacturing PMI in the month of August, from about 64.5 down to 60. And in addition to that, what's concerning is really the services PMI. We were okay when we saw manufacturing moderate a little when services was climbing, because manufacturing initially was very strong during the pandemic when services was really much flatter. But as services start to accelerate as we reopen and as the coronavirus concerns kind of started to deteriorate, the problem has really been the Delta variant. It's really had an impact here on not only manufacturing, but also services. And when these two portions of the market move lower in lockstep with each other, that is not constructive for the growth of the economy. We've seen Swedish GDP remain fairly strong here. We saw the last reading was about 0.9% expansion month over month. My expectation, especially looking at Swedish manufacturing and services PMI, if we see a further decline here, my expectation is we would have to lower GDP outlook here as well. So these are some of the things that are starting to turn in the opposite direction that we would like to see in an economic recovery. So we expect to see the September numbers coming out soon. So this is one that I do suggest for anyone watching today to pay attention to these two numbers, services and manufacturing PMI that's coming out here. I haven't looked at the calendar as to which day they come out, but the month of September should be coming out soon. Pay attention to that, because that will likely give you a better understanding as to the shape of the economic recovery in the second half for 2021, and what we can potentially also expect going into 2022. So looking at the sectors, when we look at the sector rotation data, it's not surprising to see energy is clearly the leading sector. In this current environment, really the only two things that are moving substantially here, in my opinion, are financials and energy that have a real fundamental reason for doing so. Financials, because higher interest rates is going to be better for the banks. Higher crude prices is going to be better for energy stocks. You do have consumer stocks moving in the right direction here in terms of leading. That is a bit of a surprise, especially as retail sales is okay. Consumer confidence is not particularly strong, but we still see these two consumer goods and consumer services show some momentum and show some relative strength. We do have telecommunications and healthcare also improving here in terms of sectors. And then you have industrials, you have telecommunications, you have utilities, and you have basic materials that are either weakening or moving towards the lagging category. So from my perspective, you actually see a fair amount of rotation here at the moment from the overall sectors, which is fairly healthy. Generally speaking, when you see a fair amount of rotation, that tends to mean that you don't have violent short pullbacks here in the broader markets. So when we think about, the equity markets being sideways at best and, bearish at worst, a healthy amount of rotation is likely going to keep things more sideways motion, more choppy rather than outright bearish here. So, looking at the rotation data, this is suggestive of, what is still a pullback or a correction, but not, not signaling that we're headed for significantly lower prices across the board. So with that, let's take a look at some of the ideas here in the broader markets. So, for that, I'm going to bring up the OptionsPlay tool. Now, what I'm going to do is I'm going to show you how I scan for opportunities using the OptionsPlay tool. So what I'm going to do is I'm going to go to my watch list feature. And when you go to Watchlist, we have pre-made watch lists for you, and we do it based on the markets. We have a Nordic watch list, and we have a watch list based on each individual country. So let's take a look at the Swedish symbols that have derivatives listed on them. And what I'm going to typically do is I always sort this watch list based on the score. The score is this technical score that we have here. It gives you a sense for how strong the stock is, whether a stock is outperforming the broader markets, or if it's a stock that is underperforming the broader markets. The ones with the scores of 1s and 2s are the ones that are really weak against the market. The ones with 8, 9s, and 10s are the ones that are strongest in the markets. So it's not, so it's pretty clear to see that the the banks such as Nordea or SEB, these are some of the strongest stocks, right? In a rising interest rate environment, these are the only stocks currently at the moment that are still heading straight up to the right in this type of market environment. If you look at SEB, straight up to the right, and especially if you believe that interest rates will continue to climb on more of a hawkish central bank policy or on rising inflation expectations, these are the types of stocks that will likely continue to head higher as a result of those rising interest rates. And the one thing about the banks is that they still trade at fairly low valuations. Most of these banks are trading at 10 or 11 times earnings, relatively inexpensive to their own price history. So these are stocks that have seen some upward trajectory here over the past a few months, but especially as interest rate expectations continue to rise, these are stocks that still, in my opinion, have more upside. So these are some of the ideas that I would be looking for if I'm looking for bullish opportunities here in the broader markets. And as you can see, you can look at comparing buying a stock to a call option to a call spread. And especially for those of you that are brand new to options trading, if you're still learning how to trade, one of the things that you can use is our P&L simulator to help you understand what your potential risks are if the stock was to pull back and how much could you lose. And I always encourage investors who are starting out to look at how much can you lose first. Understand how much you can lose and ask yourself, am I comfortable if I was to lose 480 crowns if SEB does not continue to move higher and actually starts to pull back? If you are comfortable with that kind of risk, Then ask yourself, what happens if the stock does move in the direction that I expect it to? How much money can I potentially make? And ask yourself, does the potential reward, am I comfortable with the potential reward given the amount of risk? Only if you feel comfortable with both of those questions should you move ahead with looking at a potential opportunity here. So let's say you want to take a look at this strategy here on the right-hand side, which, if I was looking at a bullish view here in the markets, this would certainly be one place that I would start, as I would look at buying, let's say this November 122.5, 132.5 call vertical for 365 crowns. And in this particular case, my only risk is 365 crowns. And remember, 365 crowns on a 124 crown stock is about 2.94%. I'm risking a total of 2.94% of the stock's value to place this bullish bet. So even if the stock was to pull back 10, 12, 15%, I am only risking about 3% of the stock's value to take this bullish bet. And if the stock does move in the direction that I expect it to, let's say it reaches 132 or 134, as you can see, my return on my risk here is about 173%. So if SEB is above 132.5 crowns by the November expiration, I'm going to see about 173, 174% return on my capital. So that helps you understand the strategy that you're trading here in the P&L simulator. But also, if let's say you're not quite ready, you just want to paper trade this, you can click on the blue share button here on the upper right-hand corner. When you click on that, there will be a link that will allow you to share, that will allow you to save this particular trade or share this trade with a friend. When you click on that, it will basically save this trade on your behalf. And what you can do is once you click on this link, it'll generate both an image as well as a share link for this trade. Now, you can find all of your share trades in your profile. In your profile, you'll be able to click on your profile and go to shared trades. And when you click on there, you will see two columns, the share and the image URL. So if you want to just track the trade that you've placed, like I've done here with SEB, I can just click on the link for the share URL, and that will bring back the trade that I just created. Now, because the markets are closed and I just created this trade a minute ago, the paper trade will have 0 P&L. But if you come back tomorrow and SEB starts to move higher or starts to move lower, you'll start to see this P&L change. And that's how you can use our tool to help you track a trade that you've made and see how much money you make as the trade goes higher, see how much money you lose as the trade goes lower. This way you can basically practice trading without risking your real capital. So if you're brand new to these strategies, this is a great way to help you kind of get started, get familiar with trading before you commit your real capital to a specific trade. Okay, so now let's just take a look at the watch list. And I want to show you kind of how I think about finding ideas. Generally speaking, there are 4 types of trades that I would look to make. Either I'm looking for a bearish stock that I think will continue to move lower. So let's take a look at something like this, right? This, as you can see, is red across the board and it has a low score. So it tells me that the technical score is very weak. This is a weak stock. And the red trends tell me that this is a stock that's trending lower. So not only is this a weak stock, it's also trending lower. And if we look at the chart here, as you can see, the reason this stock is so weak is because, between March of this year and September, the rest of the market was doing this, but this stock was moving sideways. So this is why this is one of the weakest stocks in the market. And as you can see, recently, the stock broke down. It broke down below what has been a significant support level for this stock for quite some time. It broke below that level. It went all the way back to retest this level as resistance, and it was rejected. So this tells me that there's probably some further downside because this stock has spent since February above 215. And since February, it's been trying to rally, but failing to do so, and it just broke lower here. And this is the opportunity that I see here to the downside. So this might be a stock where I might take more of a bearish view here. Sandvik is currently trading at 200 crowns. Maybe in this particular case, I might look at buying a put spread, buying a 182.05 put spread, or I could just outright buy the put here as well. Both of these strategies are potential opportunities to take a bearish trade, but the vertical spread here on the right is going to risk less capital. Here I'm only risking 835 crowns. Here I'm risking 1,060 crowns. And I can compare these two strategies side by side using the P&L simulator. I can say, what happens if I'm wrong and the stock rallies back into 222, right? You know, maybe this is a false break and the stock just starts to move significantly lower. Well, if you type in 222, as you can see here, I lose 1,000 crowns. Here I lose 835 crowns. And the reason for this here on the right-hand side is, and the reason you would trade the strategy on the right-hand side is to try to reduce your risk on the overall trade. And I see a couple of questions here. I will, answer those questions here at the very end. But the point is to help you understand how much money can you potentially lose if the directional view you have is wrong. Ask yourself, am I comfortable risking 835 crowns if I'm wrong? If the answer is no, you should not look at this trade any further. You should just move on to the next trade. If the answer to that question is yes, then you can take a look at, well, what happens if Sandvik does continue to move lower here towards maybe 190, right? Looking at those levels, what happens if the stock moves down to 190? If you bought the put, you're looking at about a 41% return. If you bought the vertical spread, you're looking at about a 79% return, almost double the return that you have because you're risking less capital. So the goal here is always to risk less capital, because the less you risk, the higher your return is, even if the outcomes are very similar to each other. So that's why, as you can see here, I'm only making about 200 crowns extra in profit. But because I'm risking less 200 crowns here, my return is effectively double. And what we're trying to maximize is always return. And there are two ways you can maximize return. One, you can maximize return by getting trades right and being very specific as to kind of target prices and things like that. The second way you can increase returns is by reducing risk. And that's what we're doing here. We're reducing risk, we're reducing our capital outlay, and that can help us enhance our returns if and when we are right on our overall trade. Does that make sense, everyone? Please type yes into the chat window if that makes sense to you. And just like everyone here, I always tell traders, if you're new to these strategies, you're not sure which one to trade, just paper trade both of them, right? Click on the share button, save the put option, right? Save the put option here, and then also at the same time, save the put spread. You can paper trade as many of these as you want. And what you can do is you can come back tomorrow into your profile. You can come back next week, look into your share trades, and you'll be able to see all the trades that you've made. So here are the two trades that I made on Sand. I have the long put and I have the long put vertical. You can click on the share URL on each one, see how they perform, right? If the stock goes against you, which one loses more money? If the trade goes in your favor, which one makes more money? That's how you learn how to trade. And our tool is really designed from the ground up to not only help you find ideas through our watch list, right? Color coding the watch list is really easy to find. So as you can see, SEB, it had a score of 9, so telling me it's a strong stock. And then as you can see, these were green. So this tells me the 1 month and 6 month trend, telling me that those are both bullish. So I don't even have to pull up the chart. I already know that for SEB, I'm going to get a strong stock in a bullish trend. And then what you can also look at is here's a different type of stock, right? Here's Swedish Match. As you can see, it's got a high score. So it's got a very strong technical score. This is a stock that's outperforming the market. But if you look at the trends here, this is telling me this is a stock that's starting to turn lower. So let's take a look at Swedish Match. What you have here is a stock that has greatly outperformed the market during, from February to September of this year, right? So as you can see, this was a 58 crown stock. It reached all the way up to 83. So we're talking about, a 60, 70% return in the past 6 months or so. That's significantly higher or faster move than the overall market. That's why it has a strong score. But as you can see, that's starting to turn around, and it just started to turn around a couple of days ago. Look at the trend indicator, right? It was bullish this whole time up until just a couple of days ago, on September 23rd, this is when the trend started to deteriorate. It deteriorated further here on the 24th. And as you can see on the 27th, this big red candle is what turned the trends south. And we've had two back-to-back days of what are big red candles turning the trends fairly significantly lower here. So there is a couple of ways to take a look at this, right? We have to draw the lines here, and it certainly looks like this trend, this uptrend has been broken. And usually when you have broken downtrends, you tend to target previous support. So that's around 75, 72 or so. So there's a few ways that you can potentially play this here. You can outright buy a put spread like we do here, or you can sell a call spread like you've done here. So this would allow you to effectively try different versions of this particular trade and generate different ideas side by side and see how you can benefit from this, right? So a stock like this, I'm not expecting a big move because it's already moved big to the downside. Maybe it has another 3 or 4 crowns here to the downside. So perhaps for this type of strategy, I'm better off selling a credit spread rather than buying a debit spread. And if you don't know what these strategies are, that's okay. I'll show you in a few minutes how you can access some of our education so that you can better understand how to utilize these types of strategies for your portfolio. So that's just an example, and we'll do a couple of paper trades here. We'll do one on Swedish Match, and what we'll do is we'll come back here in a couple of weeks and we'll review these trades. We'll see how each one of these perform. But please, try out the platform, use it for yourself, and see how these strategies play out. Things that you want to try, different strategies, different ideas, and use the watch list. The watch list is color coded to help you quickly find opportunity stocks that are turning around, like H&M, weak stock, but as you can see, the colors start to look better. The 1 month trend turned bullish. The 6 month trend was neutral while it had been negative for quite some time. It's starting to turn higher here. So this could be perhaps a bullish opportunity. And then everything that's red is more continuation. So you can easily use the watch list to find all of the individual stocks that you can trade options on and quickly see visually how each stock is performing. So with that covers what I wanted to share with you here today. I hope that this was helpful in giving you a review of the broader markets and kind of how you want to take a look at the different levels, how sector rotation informs our decision as to whether we believe that there's a lot more downside or this is more like a sideways market. So far, the rotation data, along with the technical data, certainly leads us to believe that it's more likely to be a sideways market rather than a continuation to the downside. But I also showed you some of those key levels that you need to pay attention to. If we break below those key levels, then I do think that we are headed lower. And the big kind of elephant in the room really has to be is around China and the data that we see out of China, and whether the economic slowdown here that we've seen in China starts to accelerate here to the downside. So with that covers what I wanted to share with you here today. At this point, what I will do is I will open this up for Q&A. But before I do, I just want to again reiterate, for anyone who's looking to learn some of these strategies, whether you want to take a review of something you've already learned, or if this is your first time, we have beginner, intermediate, and advanced courses available for you to help you learn how to trade options and different option concepts. This is all free of charge at trade.optionsplay.com/Nordic-edu, which I just posted a link into the chat window. This is a completely free course. You can take it at your own pace. We have a fairly comprehensive course list. So please feel free to learn about different concepts and start wherever you are in the learning process, whether you're a complete beginner or you want to brush up on some of the more advanced concepts. You can do that using the tools here. And if anyone doesn't have access to OptionsPlay, which is the tool that I was showing you here today, you can register for free also at optionsplay.se, courtesy of the NASDAQ exchange. This tool is available with Nordic equities, completely free of charge. You're going to get access to the platform, the courses that I showed you, the weekly reports that we send out for cover calls and short puts. I'm going to do a separate education session on that next. So for those of you that want to, generate income in your portfolio, our reports are designed to help make that process as easy as possible. So with that, what I want to do is I want to open this up for questions. If anyone has any questions, you can type them into the Q&A section, and I'll try to answer as many questions as I have time for here today. So Ian asked me, where do I get the charts for the sector rotation? Ian, I get them from a company called stockcharts.com. It's not available for free. You do have to pay. And they do not cover other European equities, but they do cover the European indices. So that's how I was able to get the European sector rotation data, but it's from a company called stockcharts.com. It is not available for free, but you can get a paid membership to access that. And I just posted a link into that in the chat window. I think a couple of questions about sector rotation, and hopefully that answered that for you. Kaj is asking, in this bearish market, would you consider buying puts instead of selling stocks that you own? So Kaj, yes, I do. I would consider buying puts. However, like I said, until the markets break below these major support levels, I don't believe it warrants buying puts, because you've already had a pretty significant pullback here, right? If you just get a more sideways, buying puts is not really going to help you. You want to buy puts if the market starts to accelerate here to the downside. And so far, I don't see enough evidence of that just yet. Now, and keep in mind, puts are really expensive, right? So if you buy a put, and even if the market moves a little bit lower, you could still lose money on those puts. So I think now the best thing to do is to sell cover calls when you're nervous about the markets. Sell cover calls, and if and when the markets break below these support levels here, so 5,300 on Copenhagen, I think I said about 1860 on the Swedish markets, and for the I'm sorry. 1860 for the Copenhagen markets, 5,300 for the Helsinki markets, and roughly, I would say 2,200 for the Swedish markets. If we break below these levels, then I think buying the put option is probably best, because the downside is pretty significant here. From 2,200 down to 1850 or so, or 1,800. Those are the types of levels that we're looking to the downside if we do break below these key levels. So thank you for that question, Kaj. Any other questions? If there are no other questions, I just want to thank everyone for taking the time out here this evening. I hope that this was helpful in giving you a better understanding as to how I'm viewing the markets, and really how to utilize the OptionsPlay platform to find opportunities, paper trade them, and potentially execute them into your own portfolio. With that, thank you so much. I hope you guys have a great trading day, and we'll send the recording and the slides to you by tomorrow morning. Thank you so much, and have a great night.